And obviously, it's a very difficult situation for the Fed. They're not sure what's going to happen with the proposed U.S. tariffs, with proposed retaliation by our trading partners. And so they have to make a decision about something that may happen. I think their baseline is like our baseline, that we get away without having too much trouble in the global trading system. But certainly the Fed needs to be prepared for that downside risk.
What do you think? It sounds like they're still on the path to gradual rate hikes, but do you think the Fed could possibly pause and really put growth sort of in the driver's seat when it comes to their decision as to whether or not to proceed as planned, as opposed to the inflationary pressures that they see and the inflationary pressures that may come about because of tariffs?
I mean, certainly that's a concern. I think that they may be watching what's going on with trade. They may say that that's a downside risk, and so therefore they're going to pause. That being said, I think that their baseline is probably that there isn't too much impact of trade, that they are going to be concerned about inflation moving consistently above that 2%, so that we'll continue to see gradual rate increases in 2018 and then again in 2019.
What's your take, Rebecca? We're seeing a slight tick higher in the markets.
Mm-hmm. I mean, what they're facing, we're all facing, this dual reality that the domestic economy in the U.S. is very strong and in and of itself argues for a continuation of hikes. And right now we've got kind of 1.5-ish priced in between now and year end. However, the trade risk is large and it's growing. We could get another step forward on that tonight. Worst case for the Fed is stagflation, where you get higher prices but a slowdown in growth. What does the Fed do with that? If they raise rates into that environment because of their inflation part of the mandate, right, exactly. It tips us over into a recession potentially. And if they don't and inflation gets ahead of them, the Fed always worries about inflation getting ahead of them.
You know, Rebecca, I hear a lot of folks on Wall Street and around the country saying that, well, we sort of think that we're going to skirt the worst of this, and investors seem to be acting that way. Mm-hmm. In other words, there's no panic in the market. But what is the way out of these trade issues? And does it require one side or the other just to fold?
I think someone's going to fold, maybe too strong a word, but give something.
And neither of, certainly not China, certainly not the White House, are historically folders.
And I also think going into the midterm election, if this is a topic that plays well with some segment of the Republican population and voters, President Trump is incentivized almost to keep it going. So he needs to have a win big enough that he can show that to his voters as I got you this. But even then, is he going to end it? I don't think this goes away.
Is there a possibility that there is, did we see a sliver of light toward the win when it appears that some European car makers say we are in favor of eliminating tariffs on all cars?
I thought it was fascinating that this was led by corporations rather than a government, because Angela Merkel right now, Justin Trudeau, President Xi, they all need to show to their populations they're being strong and not being bullied. But the companies are saying, hey, we have shareholders. We need to do the right thing for them. We need a deal. So maybe you can get something led more by companies rather than by governments.
And that would be a win.
Possibly.
For President Trump, it seems to me.
Although I know you're going to have a guest on later who's done trade negotiations. This is so complicated because of WTO rules. If you cut tariffs for one country through WTO, you may have to cut them for all. How doable is that? It's so complicated.
Gus, Rebecca mentioned stagflation. How likely a scenario in your view is that?
It's becoming more and more plausible. The tariffs would add to consumer costs, so that would drive up inflation. At the same time, they'd result in slower growth. So I think that the Fed has to be prepared for that eventuality. I don't think that's going to happen, but it becomes more and more plausible as we see more of the rhetoric heating up.
Gus, what do you think about the labor market? The Fed saying that the labor market is strengthening, but we also know, of course, that it's getting tighter and tighter, and it's harder for employers to find qualified employees to fill these open roles to the extent that they exist. How does that play into inflation if we see wage inflation going higher simply because that's what has to happen to fill those roles?
That's right, and we expect to see stronger wage growth through the rest of 2018 into 2019. That's the primary impetus for the Fed continuing to raise rates. They're concerned about labor cost pressures continuing to build. They're concerned about the potential for that to result in higher inflation. So what they want to do is let the labor market continue to improve, but take a little bit of the pressure off so that by the time we get to, let's say, mid-2019, we're in a good situation in the labor market. We have solid job growth. We have an unemployment unemployment rate that's a little bit below 4%, but those labor pressures are easing off a bit instead of continuing to build.
But then if we keep going down that path, as the Fed mentioned in its minutes, we're probably also talking about a yield curve that goes flat to inverted. And while that certainly doesn't necessarily create a recession, it is a sentiment indicator that is getting more and more focus.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.